more Japanification, financial Japanification. So last week, as you can see here on your screen, on Tuesday, November 26th, this article came out from Jeff Cox of CNBC, and it's featuring Lael Brainard, who she's vying for a better position. She's a Federal Reserve Board of Governor right now, but I've talked about this in the past. Danielle DiMartino Booth has talked about this in the past as well. She's looking to advance her career further. She wants to be Treasury Secretary if Trump does not win in 2020. She was hoping to be Treasury Secretary if Hillary Clinton had won in 2016. And so she's tipped the Fed's hand in the past with saying back in February of this year how the Fed did not care if they inverted the yield curve. And then, of course, the Fed did a 180 in the last month or so, and with the rate cuts finally was able to manipulate the yield curve back. And so she is tipping her hand again, and she's talking about how the Fed should, again, copy Japan, even more Japanification, financial Japanification, even more financial repression, even more manipulating of interest rates, and that the Fed, she recommends the central bank could use caps on interest rates the next time short-term rates get near zero. The suggestion is part of a review the central bank is doing of the tools it used to respond to the last economic downturn. The Federal Reserve should consider capping the level of interest rates the next time it is confronted with future economic downturns, she said last week. As part of a continuing look the central bank is taking at what potential responses it can come up with when very short-term rates go to zero, Brainard suggesting using Treasury purchases to limit how high short and medium-term government bond yields can rise, which is what Japan has been doing basically for the last 30 years, give or take. Things are so bad in Japan. I'll talk about this in a second after I'm done with this article, but things are so bad, and the Japanese government bond market there's very little trading volume. There's days with the Japanese government bond market where it only trades by appointment. There's no actual trading on some days. And the Japanese government cannot even afford a 1% increase in yield. That's how large of a national debt, the Japanese government bond market is. A 1% rise they cannot cover the interest payments then. So there's a lot of signs now that things are finally starting to crack with Japanese banks and the Japanese government bond market. Well, I don't know about the Japanese government bond market yet, but Japanese banks at least, especially Japanese regional banks. Okay, she said, back to the article, she said tools such as quantitative easing showed limits that yield caps might not. Again, this is to benefit large government, big government. She is a Democrat. She is a Hillary Clinton donor. She got publicly outed as a Hillary Clinton donor for making a large donation to Hillary Clinton. So she is in favor of big government. The combination of a commitment, and this is what financial repression, it redistributes wealth, it redistributes investment income from savers, from pension funds, and retirees, and it redistributes it to big government. So government doesn't have to cut its budget. So large corporations don't go bankrupt with higher interest rates because they've over-leveraged their balance sheet, and credit ratings agencies won't downgrade them even though they should. The combination of a commitment to condition liftoff on the sustained achievement of our employment and inflation objectives with yield curve caps targeted at the same horizon has the potential to work well in many circumstances, she said in prepared remarks for a speech at the New York Association for Business Economics. I totally disagree. This is just kicking the can down the road and delaying things. Eventually you hit the wall. You hit what is happening with Japan, where the Japanese banks hit limits. So they're gonna continue this game, this charade, as long as possible. She also touched on a variety of other topics, saying the Fed's 3 rate cuts this year amounted to significant action to help support the economy. Yeah, and by supporting the economy, uninvert the yield curve, after she said in February that the Fed didn't care if they inverted the yield curve. Whoops, 180, screw up. Got to pull more levers for Keynesian economics. Against the headwinds of slow global growth and tariffs, also the rate cuts were done. The 2 main reasons, in my opinion, were to uninvert the yield curve. The yield curve, of course, I'm looking at gurufocus.com/yield curve. The yield curve is not inverted anymore. Most of it's not inverted anymore. There's a tiny little part at the front of the curve. Most of it's sloping again. So the Fed has been successful with uninverting the yield curve. They only had to do 3 rate cuts that a lot of people, a lot of financial professionals said they didn't need to do. Yield cap is not new for the Fed. Officials discussed the option at their October meeting, and literature and yield caps go back to at least 2010. Yeah, and now Japan can't do those things anymore because Japan cannot afford any higher interest rates. There's just unbelievable amounts of inefficiencies, misallocation of capital in Japan. Talk about that with this Real Vision TV interview and a couple other articles in a minute. Once I'm done with this article, during the financial crisis, the Fed took its benchmark rate to near zero and instituted 3 rounds of bond purchases totaling $3.8 trillion. Officials recently have been reviewing how effective those moves were and what can be done the next time rates fall to what central bankers call the effective lower bound, generally considered around zero. The review should make clear that the committee will actively employ its full toolkit so that the ELB effective lower bound is not an impediment to providing accommodation in the face of significant economic disruption. She added that yield caps would help bring down longer-term rates that consumers pay for housing and other purchases. Maybe on teasers, it's not helping on credit cards. It's not helping Main Street that much. So if the goal is to juice the housing market, I don't know if that's going to work. If the goal is to juice housing, the real estate market even more. Because normally with refinancing, you have to pay, at least my dad did, you had to pay a pretty large fee to do a refinancing with the banks. From what I've also heard, the conditions to get refinancing done, there's a lot stricter conditions. Maybe they loosen the conditions then for mortgage refinancing. I've heard, I can't confirm this because I don't own a home, but I've heard from other people I've spoken to about this, that the conditions for refinancing, you have to jump through a lot more hoops, the requirements. Maybe that's their stimulus, to hope that more people refinance their homes, pull equity out, and spend it. RR says he's trying to refinance right now. It's not easy. Yeah, I've heard it's not as easy as it was in the past. I don't know if they're still taking a large fee. In like 2010 and 11, I believe the larger banks wanted pretty large fees to do refinancing, even though interest rates were lower. So Main Street hasn't benefited from all this financial repression unless you're getting checks from big government. Main Street has not really benefited. Well, unless you have stock market ETFs. If you have index funds, if you have your retirement accounts in index funds, stock market index funds, you've temporarily benefited. Anthony says, the juice owns the market. No, OJ does not own the market. OJ is currently at strip clubs and golf courses looking for Nicole Brown's killer. Apparently. That's probably politically incorrect, but I think it's funny. His nickname used to be the Juice, if you're not familiar. Okay, back to the article. Under the cap plan, they would stay in place. The interest rate caps would stay in place as the Fed achieved its goal on inflation and employment. Once they are reached, the securities would roll off organically, unwinding the policy smoothly and predictably. The problem with all this is that over the next 6 months, according to Luke Groman, who I don't agree with Luke on a lot of things, because on his Twitter, he doesn't criticize all the governments, he just criticizes the U.S., even though he lives here still in the U.S. But he says that the U.S. government needs to roll over, issue another $6 trillion, and 6 months after that, another $6 trillion. But there are so many problems globally that emerging markets could crash. Japanese banks are a problem apparently now. They're a large problem apparently now. European banks are a mess. Not just Deutsche Bank. The Chinese banking system is a mess. There was another People's Bank of China warning about that on Monday. There's been multiple People's Bank of China warnings in just the last week. There was a report that came out warning, and then there was the head governor, Governor Yi. On top of that, in the last couple months, there's been Premier Li and Xi. So you have Premier Li, Xi, and Yi all warning about the Chinese economy. Okay, so now I have 2 articles about problems in the Japanese economy, Abenomics, problem with Japan, how all these countries, the European Union, the US, all cannot copy Japan. Japan was the only country doing this for many decades. Japan's been doing this, I think, for over 30 years now. And every country cannot do this. They're going to have to change the rules. At some point, there's probably going to be a system reset, some type of new system. It's not going to be possible for all these governments to have negative yielding debt, financial repression, grow the size of government, issue more government bonds. Who the hell is going to buy them? Maybe they go after retirement accounts at first, but then you're looking at people protesting that with pitchforks and torches, potentially, or lawsuits. I personally, my humble opinion, do not think all these governments can get away with another 10 years or more of Japanification and financial repression. They've been doing financial repression, manipulating interest rates lower, so the government doesn't have to cut its budget. Republicans and Democrats, the budget deficits are extremely large. Okay, so my friend Daniel Lacalle wrote an article about this called The Lesson from Japan's Monetary Experiment. Also, on November 23rd, this author was M.N. Gordon. This is an Austrian school economist on the Libertarian Austrian School Economics website, Acting-Man. There's another article about Japan's yield curve control regime is coming to the U.S., so if you want to read more about that. I really like Daniel Lacalle, the way he writes. He has a PhD in economics, and he's an Austrian school economist now, and he writes in a much easier to understand way, so the average person, even though he has a PhD, can understand what he's saying. So he talks about a recent article in Financial Times. Abenomics provides a lesson for the rich world. Mentioned that the experiment started by Prime Minister Shinzo Abe early 2010 should serve as an important warning for rich countries. Unfortunately, the article's lessons in air quotes were rather disappointing. These were mainly that the central bank can do a lot more than the ECB and the Fed are doing, and that Japan is not doing so badly. He disagrees. Failure of Abenomics has been phenomenal. The balance sheet of the Central Bank of Japan has ballooned to more than 100% of the country's GDP. The central bank owns almost 70% of the country's exchange-traded funds. So that's not capitalism, even though capitalism will be blamed. The Bank of Japan, Japan's central bank, owns 70% of all the Japanese stock market exchange-traded funds, or ETFs. And is one of the, that's even larger than the Swiss National Bank. That's even larger of a hedge fund than the Swiss National Bank, which has technology stocks and regular stocks running their Euro peg for 3 years, creating hundreds of billions of dollars out of thin air, and then becoming a hedge fund, or creating their own hedge fund. One of the top 10 shareholders in the majority of the largest companies of the Nikkei Index. They're also one of the top 10 shareholders in the majority of largest companies in the Nikkei Index. Government debt to GDP swelled to 236%. Despite the record low cost of debt, the government spends almost 22% of the budget on interest expenses alone. All of this to achieve what? None of the results that were expected from the massive monetary experiment, inventively called QQE, quantitative and qualitative easing, have been achieved even remotely. Growth is expected to be one of the weakest in the world in 2020, according to the IMF, and the country has consistently missed both its inflation and economic growth targets. Despite, in the real world, from what I hear, actually portion sizes in Japan are shrinking. Taxes, value-added taxes in Japan went up again, which is going to hurt the economy. VAT taxes. Taxes on other things going up too. While the balance sheet of the central banks and the country's debt soared, real wages have been stagnant for years. If you're not, it's even worse if you're counting the taxes, how people are taxed more, and economic activity continues to be as poor as it was in the previous 2 decades of constant stimulus. Main lessons that global economy should learn from Japan are the following. No country can offset the problem of demographics and productivity with higher debt and money printing. Technology and productivity challenges cannot be solved incentivizing malinvestment and government spending. Doing the same with different names will not generate a different outcome. Wrong diagnosis will lead to worsening outcomes. If you abandon structural reforms, the result will be worse. The biggest lesson from Japan is not that the central bank can buy equities and keep kicking the can further. The biggest lesson from Japan is that monetary and fiscal policy is not designed to kickstart the economy and improve growth or productivity, but to perpetuate the imbalances created by excessive government intervention and transfer wealth from salaries and savings to the government and indebted crony sectors. Bingo! Hits the target right there. A+. Lesson from Japan is that no government can make 2 + 2 = 22, but they can prolong budget imbalances for much longer than logic would dictate. The true lesson from Japan is that central planners will continue to prefer to gradually nationalize the economy before even considering a moderate reduction in government size and control of the economy. The result will be almost no growth, poor productivity, and rising discontent, but the bureaucratic machine will be safe. This all fits in with my stagflate and tax and lie narrative. It's just going to get worse. And they're going to lie about it. They're going to lie about the real inflation rate. Japan, apparently, according to the government statistics, Japan has no inflation either. There is a really good interview. Hat tip to my friend Wayne, who's listening to this podcast, Wayne SIU, in the chat section there, who sent me this Real Vision TV article I missed. Not article, excuse me, it's a video. It's an interview about 46 minutes long. I watched it last night. Will a Japanese banking crisis lead to global recession? This interview was released on August 23rd of this year, and it was filmed on July 11th in London. This is with Shannon McConaughey, if I pronounce that correctly, of Horseman Capital, and this goes into extensive details about how bad Japanese banks are. Now, Japanese banks have been zombie banks for a long time, decades, most of them. Most of them have been zombie banks kept alive through stimulus and accounting tricks and other stuff for decades. But apparently the banks, to pretend to have profits, have done even worse accounting trick. They call them accounting tricks in the interview. It's accounting fraud. No one's going to jail, though. You can't jail any banking executives anymore. In Japan, in Europe, in the US. So this interview goes extensively through all the details, all the weeds, if you're interested in all the details, about how bad things are getting in the Japanese banking system, how Japanese regional banks are not even making a return on their cost of capital. So their cost of capital, oh my god, it's so bad. They're doing accounting tricks to where they're moving stuff into interest income that should be not be interest income, and the capital that they need to raise is they're overpaying for it. So they're losing money hand over fist, and they're doing accounting tricks to make things look a lot better than they are. And then it also talks about why the Japanese central bank, the Bank of Japan, had to buy 70% of the stock market ETFs, and that's because the banks owned large chunks of each other's shares prior to that. So the banks were all hedging at that time by all investing in each other. And I guess that was playing Russian roulette with the Japanese government and the Bank of Japan, their central bank, saying if one bank fails because they all own shares, lots of shares in each other, then the other banks would fail. So that sounds like financial blackmail. Japan's debt to GDP is crazy. However, Japanese citizens still have large savings. It's complicated. But Japanese citizens invest in Japanese government bonds and real estate. And also, Japanese banks have taken an enormous amount of foreign credit risk into collateralized loan obligations. No, Japan, as far as we know, IBJI, Japan is not in the repo market. Now, there could be American subsidiaries of Japanese banks that are tapping repo. But as far as we know, Japan is not involved in repo, not doing repo. Now, Japan has enormous exposure to very risky credit investments. I talked about this on last night's show. The Bank of Japan has even issued warnings at the end of October. Japanese banks, and this is because of manipulating interest rates, because of financial repression. Japanese banks wanted to earn extra income, so they started taking on more risk, and the risk they took was outside of Japan. They do have they've dumped a lot of their Japanese government bonds, and now Japanese banks own a lot of Japanese stocks and ETFs too, but they've been investing in these risky credit instruments outside of Japan, including collateralized loan obligations, where they have a very disproportionate amount. And imagine if the Bank of Japan orders the Japanese banks to sell all these collateralized loan obligations. It could happen and bring capital back to Japan in a crisis. That might happen. It is talked about in that Real Vision TV interview that's 46 minutes long. Now it's free. So I can put the link to that interview at the end of this video. RR says this is Twilight Zone stuff. Yep. dystopian, Orwellian. Another story I can cover, you want to talk about Black Mirror, dystopian, Orwellian, China now, story just came out, mainland China, you now have to buy a new smartphone, you have to get your face scanned. New story just came out on Monday. They take multiple scans of your face. You're permanently in the database, like it's that bad. So, yep, I have the story. It's in the Wall Street for Main Street Technology Group. Probably coming, probably being tested in China, and then coming to a government near you in a couple years. So, to recap very briefly, a lot of the problems in the global financial system. You have U.S. corporate bonds, which are an absolutely enormous mess. Record amount, I think 10 trillion total. Record amounts of junk bond debt. Shell oil junk bond debt. Leveraged loan problems, collateralized loan obligations. Japanese banks are in those. You now have enormous amounts of problems with regional Japanese banks. And the regional banks, they're going to try to sell it that it's contained. It's only small regional banks. Very similarly to probably what they told us in 2005 to 2007, that it was only subprime and subprime was contained. So Japanese banks, if you read these articles and also listen to that Real Vision TV interview that goes through all the painstaking details of problems with Japanese banks, it's very in-depth at 46 minutes long. So Japanese banks are now a major issue, especially if Japanese banks decide to dump all of their CLOs. Who the hell is going to buy all those CLOs? There's at least 750 billion of CLOs. Who's going to buy the CLOs? If the Japanese banks are ordered by the Bank of Japan or the Japanese government to dump them. You have enormous problems in European banks. You have enormous, not just Deutsche Bank, although Deutsche Bank is the epicenter, but it will anchor. It is the anchor that could take down a lot of other European banks with it. And then you also have problems in China. Immense problems in China. There's been a number of defaults of state-owned enterprise on their bond payments, and also private Chinese companies on their bond. There's been bond defaults there too recently. The bond defaults are growing in China too. But as long as the dollar index stays close to 98, 99, it's at 97.83 now when we're doing this live stream show, this is still going to be a lot of problems for emerging markets. Rob says NERP and ZERP are burps. Broken interest rate policy. 100% agree, Rob. 100% agree. Currencies start falling relative to what exactly? See, that's the thing. Is it relative to your bills or relative to gold? Gold is at or near an all-time high in every currency but the US dollar, where it's heavily manipulated. Rob asks, how can you short CLOs? It's a good question. I haven't looked into it that much. I would imagine finding the insurance companies in the US and Europe that own a lot of this garbage, and also the reinsurance companies that have insured the insurance companies that own this garbage, and also, this is just my opinion, and also the Japanese banks that own this garbage. And maybe you could find out the banks that are making most of this stuff in the Caribbean through a subsidiary. I don't think there's any credit default swaps or anything like that on the CLOs, as far as I know. And from what I've heard anyway, a lot of large American multinational corporations, they figured out after 2008 and 9 that the credit default swaps were a signal, and I've heard rumors for a while now, for years now, that some of these large corporations, the executives, especially like the CFO and the CEO orders them to, they buy the credit default swaps. So you don't get the signal for some of these large corporations that they're in trouble because they're buying their own credit default swaps. So there's no spike. Yeah, I'm not familiar with how to do over-the-counter derivatives trades. But the Japanese banks are holding a lot of this stuff. SoftBank does not own CLOs, but SoftBank has a lot of additional problems. I've talked about those. SoftBank has taken Japanese investor money that they've raised through bonds. So they've guaranteed a interest income of 1% to 3% depending upon the bonds that they've issued to Japanese investors. And then SoftBank took that capital, and SoftBank has gambled that capital, many billions of dollars capital, on Silicon Valley unicorn Ponzi schemes, betting that they get the next Alibaba that goes from $20 million investment to, what, $120 billion or something. But the interview I did with Kevin Duffy on Friday doesn't sound like there's going to be a lot of good IPO unicorns. That game is starting to end. That shell game is starting to go in reverse. Yes, Pudenda asked, doesn't Berkshire Hathaway own a lot of bank stocks? Yep, and insurance stocks. He invested the float. He invested the insurance float. That's how he made a lot of money with Geico and other insurance companies. Yep. He also has $128 billion in cash. So Buffett says the stock market is still cheap, but his actions are more important, and he's holding cash. He has $128 billion in cash. So I judge people by their actions, not by their words. Although I think it's important if their words match their actions, but their actions are more important than their words. The only unicorns left will be your Lucky Charms. Or some of the crazy ones on the dating apps who actually wear unicorn onesies with alcohol and drugs. Anthony says he saw a Zero Hedge article citing falling housing CPI as a signal that we are heading towards Japanification. Japanification, Anthony, is more about manipulating interest rates to benefit big government, so governments can continue to grow or maintain spending levels, maintain their budgets, don't have to cut. And so large corporations that are overly indebted, not just the banks, especially here in the U.S. with the corporate bond market, those corporations and banks are way overly indebted and cannot afford higher interest rates. Main Street does not benefit from Japanification. The narrative will be that we will benefit, but it's bullshit. Ask the people in Japan. Their tax, from what I'm hearing, the value-added tax in Japan got increased again. The last time there was an increase in the VAT tax that hurt the Japanese economy. So there was another VAT tax increase in Japan. The portion sizes, the shrinkflation in Japan is enormous. And old existing taxes in Japan have been increased from what I've heard from sources in Japan I've talked to, and new taxes have been layered on, which is very similar to what is already happening in the US. MMT is popular now because it's economic popularism. It's promising people more freebies for nothing. So Elizabeth Warren knows full well that her healthcare for everyone, Green New Deal, all these things, stuff that's going to cost tens of trillions, the government cannot afford it by just taxing everyone. They have to print it. Look, if they taxed everyone the amount, an enormous amount, the real economy would start to collapse even faster than a lot of the economy already is. It's popular because in exchange for your vote, politicians are promising you to wipe your student loan debt, promising you free healthcare, promising you free education, promising you potentially $1,000 a month in a universal basic income. Well, anyone who knows real economics knows that there's no such thing as a free lunch. RR says MMT will only speed up the decline. Initially, it might look like a boom. RR, initially, it could look like a boom. The stock market in nominal value could go a lot higher. The people, as the Cantillon effect in Austrian school economics, the people who get that newly printed money, trillions first, could spend it and create a boom in something, in stocks or in industry or in the real economy. And then there will be an even larger bust. Getting free stuff is always popular. And this is what Alexis de Tocqueville predicted would eventually collapse the U.S. It will be incredibly difficult to value anything, Rob. Incredibly. People will be speculating. It will be a greater fool theory on the stock market. It will be people betting on Dow 30,000, people betting on Dow 35. People will not be buying anything for fundamentals whatsoever. Okay, got 2 super chats. Thank you, Veritas Arrow. Appreciate the 2 super chats. We live in a worldwide mouse utopia. Welcome to dystopia. It's more like Animal Farm. All animals are equal. Some are more than others. The steak dinner stuff was just a joke. I don't eat steak all the time. I got a nasty email about that. Oh, man. I get nasty emails, ridiculous emails, complaints, grammar complaints all the time. Ridiculous. I don't eat steak all the time. I am low carb, though. I try to be low carb, mostly paleo. It would be nice if we could end the Fed. I'm not optimistic or realistic that it's going to happen anytime soon. Wayne says Elizabeth is the most equal of all. She's good at stealing other people's shit. She even stole the Kung Pao chili recipe. I mean, who steals a chili recipe and plagiarizes it and puts it in a cookbook under their own name? That's like really desperate stuff. Okay, so I think that's pretty much it. If you want to read more on this, I highly recommend watching that interview with Shannon McCullough of Horseman Capital. If you want to go in depth on this, you combine it with the CLO stuff I talked about yesterday in Japanese banks, the warnings from the Bank of Japan. And he said in the interview, he laid out a very well in-depth, detailed case that next 12 months for Japanese regional banks, something really, really bad could happen. Pudenda says deflation first, then inflation. It depends how you measure things, because Pudenda, there's clear inflation in the asset prices, in stocks, bonds, and real estate. There's clear inflation in that. It really depends what your definition of inflation and deflation is, because a lot of the fiat currency and credit that's been created since 2008, and central banks have increased their balance sheets enormously. It's not just the Federal Reserve. The Federal Reserve gets blamed a lot, but actually the European Central Bank, the Bank of Japan, officially their balance sheets are larger. Now, off balance sheet, we have the currency swaps. We need an audit to know the exact number. We only have educated guesses. It's at least 20-something trillion on the currency swaps. Well, Japan, Veritas, Japan is going through that first. Japan has the worst demographics problem now. Japan has the worst demographics problem. China also has a bad demographics problem. It's getting more and more expensive to raise kids. And that's because fiat currencies are being devalued rapidly and taxes are going up. And it's tougher to find a high-paying full-time job in most industries. It depends. It depends if the Fed steps up, not QE, or not QE. Let's say they take it from $60 billion a month up to $150 or $200 billion a month. What do you think the stock market's going to do, even if some of these leveraged loans collapse? I think we're going to have more volatility. We had a big volatility spike today. Let me pull this up. We had a big move in the VIX. It moved 18.15%. It moved up 2.29 in a day, up to 14.91. So that was a pretty big pop in the VIX. Some point more volatility should come back, though the leverage short volatility trade is way over 1.5 trillion in size. That article, no, that that video that Shannon was interviewed in, he talked about how Japanese banks have been selling leverage volatility too. Yay, the Japanese banks are at the party, doing lots of crazy things. And we're not talking about drunken karaoke. Okay, well, that's it for now. Thank you very much to my, it's around 200 Patreon account contributors. Hopefully it will be 300 in the next year. My dozen or so monthly PayPal contributors and people tip me once in a while. All the articles that I talked about, the 3 ones, will be in the information and description section. And the video from Real Vision TV with the free interview that's 46 minutes long. If you really want to learn about all the accounting tricks that regional Japanese banks are using and all the shenanigans and chicanery that are going on in Japan and no one will probably go to prison for, you can watch the interview at the end of this video, probably in about 10 minutes.